All right. Good morning, guys. Happy Easter Sunday to all of you out there. I know it's been a while, but we're going to get back on the market analysis videos. So here we are. And last video I made was somewhere in here calling for a market bottom. I was calling for a market bottom down in the 215 to 200 neighborhood. You can see we hit about 218, which was not it was not out of the question that we could bounce around there. I was expecting maybe slightly lower, but they decided to front run it, turn the boat around on a nice little gap up here, as you can see, and kind of made everyone that wasn't buying miss out on this up move so far. And so here was really your chance to get back in. You can see that, and I'm going to explain what all these lines are, but here was your chance to get back in, right? We came and the colored levels are longer term levels. They're more important. The green are monthly levels, the orange are weekly, and the white are daily. So you can see we kind of came down into that general area, and we had this area here where sellers tried to step in at these two important levels, and they tried to push the market down, and the next day was followed with buying. So what does that tell you? Not to mention, this was during a time when unemployment numbers were actually being released that were massive increases. And what did the market do? It turned around and rallied on solid volume, closing over the day that was rejecting these two levels. So we gapped over those levels and we went on bad news. That is something you have to pay attention to. Don't pay attention to the news itself, but pay attention to how does the market respond to the news. And so that was a huge hint for me and my group that this was for sure a market bottom. And so a good area of retest is obviously these levels and where the bears tried to push down, but where it was actually bought. That's usually going to be support when retested, because that's showing that there is a certain amount of demand at that area for buyers, right? They were not letting the market get pushed down, and they were rallying on bad news, so there is going to be demand in this area. And we can see the market came back down, had a nice green bar, and that's all she wrote. Now we are back up into an area that is of huge interest to a lot of people. There's a lot of people looking at this area. So we're just going to look at weekly charts to start off. First of all, notice this big white trend line. This goes all the way back to 2009 lows. Touch on the 2009 lows, you can't see it. Then we touch here. Excuse me. Touch here, we touch here. Get a few close misses. We touch here, double bottom, and we touch one more time in December of 2018. And I want you to look very closely at the recent action. Come down, hold it. We gap below it. It's used perfectly as resistance, right? Perfectly. Closes on the lows. Comes up, can't close above it. Week number 3 on the below it, can't close above it, close below. Week number 4, this last week, here's selling pressure, and just what we looked at on the daily chart, the same exact thing. You've seen selling pressure, and it's been bought up on increasingly bad news. And we've actually healed ourselves above the 2009 trend line. So I'm not saying this to say that we're not going to go down. It's not possible for us to go down. But what I'm going to tell you is that when this happens, when a trend line of this importance breaks and then is recovered back above, there is usually 90% of the time a flurry of buying very high to the upside. Okay, so I'm going to throw that out there. With that being said, we are in a huge area of importance, and I know this looks messy, but this is taken from major pivots in the market. All these zones, they're taken from major pivots, monthly, weekly, daily charts, right? So I'm looking for where has the market come to and rejected the most amount of times on different time frames. And as you can see, this kind of 285 up to up here about 300, 295, 300 has a huge amount of market importance in the past. And you can see we came down in here and we pivoted and we got below it and we pivoted down, and now we are returning. Do I expect some sort of top in this area? Yes. Do I expect it to make new lows? Absolutely not. Absolutely not. Not yet, not here, not now. Do not be bearish on this market. You can be short-term bearish up in this area. Look for signs and signals of a trend change. But here's the deal. This weekly chart, along with other weekly charts we're going to go through in other sectors, it's telling me the market is not done going up. It's not done going up. That doesn't mean we can't have another leg of the correction that maybe leads to all new lows, but it's not right now. So what I think, first of all, the first level of importance here is this weekly level, this orange line right here. That is this level taken from this pivot right here. Okay, that's this pivot. So what we want to watch early next week is, does the market gap below this? Does the market stay above? Or does the market gap up into these levels? Those are the three scenarios. Scenario number one, we gap below. That is severely bearish, short term. Short term. What I think would happen there is we're going to go down and we're going to have a test of this area here, maybe slightly lower, and we will get a bounce all the way back up to more highs. Okay, that's scenario number one. Scenario number two, we open sideways. If we open sideways and we continue to pull back to this zone and hold, staying sideways, I've got news for you. The market is going to build energy to get through this area. In order for that to happen, there needs to be multiple days. I'm talking 3, 4, 5 days sitting in this range. Scenario number three, we gap up or we see a rally Monday, maybe Tuesday, but really Monday up into the zone. That's a short. You need to short that because we've come pretty far, pretty fast. And if the market is up in the zone quickly without building enough energy to get through it, there's going to be sellers. Now, what price am I really, really interested in shorting? I'd have to say it's really up in this zone around 295, okay? 295. There is another pretty interesting area. There's an open gap here at 288.42. So there's two areas that I'm really watching. 288.42. That lines up with this pivot here, and there's an open gap where usually sellers are waiting if price comes in fast. So 288.42 is key to watch early next week. This is only if the market's up there very early next week. And if the market happens to get up, this is probably not going to happen, but if it happens to be up in the 295 to 298 neighborhood, especially early next week, it is 100% a short. And then targets for that short are just these zones. Okay, so you're going to have a zone 275, 270, and then you're going to have this most recent zone that we made right around 260, 263, and then on a bigger down move, you're going to have this zone, which I think will be the bottom of any down move, will be capped short term, right? If price action seems more bearish coming down, there's heavy supply coming in, high volume, maybe we just bounce here and then roll over. But there will be a low here if we come down. And so this will be my final target. If I was in a short trade off of this area early next week, that would be my final target. Not sure if that would get hit or not, but that would be my final target. And so now let's go through the weekly charts for the other indices and kind of see why am I so bullish other than what I just said. So the IWM small caps, these are telling us something right now, right? Same weekly, basically same weekly chart. Now, big picture, they're lagging, right? They have not retraced 50%. I believe that's somewhere up here. They have not retraced 50%, whereas the spiders have. But they are showing the same relative strength, and look at them up almost 5% on the day on Friday, compared to a SPY of 1.5%. And so that in and of itself, combined with other things, is telling us that risk is being put on in these markets. Money is going into risky stocks. And we're going to look at some other sectors that keep confirming that. And so this is a huge tell for me that the market is not done going up yet. That this is short term, right? Short term. I'm only speaking to short term. I don't know what will happen over the long term. I let that unfold for me. And then I judge that as price continues to move and show me what might happen. Right now, we're short term bullish. So we've just broken this pivot on the IWM. That's obviously the place that we're going to look to find support in this zone. That would be our tell if the market was failing. We'd break back and close daily below here. We're going back down here. And so that's your first tell if this breakout is failing. I don't really expect the IWM to have a serious amount of overhead resistance. Probably, honestly, I mean, this is our big zone. And then obviously here your gap window is going to be another key area. So I think 135. And then if we happen to get past this 135, you're going to be looking up here. But I do think this will be a struggle, this area here. So we will go ahead and see how it acts there. Let's move on to the DJT. The DJT is telling us the same thing, and I want you to especially note the volume on the DJT was incredibly high, right? So what sector is money flowing into the most? It's transportation stocks. So if you want to play upside, I'd suggest focusing on these transportation stocks. They look like the index that money is flowing into the most for this week. Same pattern, right? So you have sellers that are overcome by the buyers. Big, big, big weekly green candle closing above the last two pivots. So that's a breakout, right? And it's on high volume. This means you have institutional participation on the upside. Highest volume, higher than the selling. Higher than the selling, right? Where do you get your highest volume? At the bottom, and on the breakout to the upside. If anyone tries to tell you that this is a bearish chart simply because it's going up and had a big fall, they are absolute fools. Absolute idiots, right? This is bullish, 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 bullish. The DJT, right, we have a trend line break here. I believe this is a monthly. Let me go to a monthly. So this is our monthly trend line from 2009. And so something to note is that the IWM, the DJT, these are leading indicators, and the IWM would have the same trend line break. It would come up to around this area, our 140 area that we were looking at. And so the thing to note is those markets, these leading indicators, have been lagging the market, as we know, as I've been preaching for the last 2 years. And so they kind of forecasted that this drop would come. Now, while the S&P has healed its trend line, these have not. But look at how much room they have to come up. Now, there's two options here. You come up and you reject hard for a third, or I guess this would be a 5-wave correction, right? So that's one option you have. And that 5th wave is usually much slower, so we'll see. Or you can come up to this trend line, and maybe we have a smaller correction that does not make a new low, and we continue to make new highs below this trend line as we form a new trend. So those are kind of our options, and we don't know what's going to happen. We don't know. We don't look at the economic situation and say it's bad. This is going to go down, because that's how bull markets are born, right? When pessimism is at its highest, that's when the bull market is born. And I don't think we can look at these charts and say that they're going lower at the time, because you know what? We have institutional participation on the upside in certain sectors that are leading sectors. And so right now, all we can do is say that they're bullish. They're bullish until they're not. Is there going to be resistance in here? Absolutely. Sure. Why not? There's obviously a key area up here at the 9,500 area, and you've got an area here where there's a large breakdown, and so you're likely going to find resistance in those two areas. And while we know it's bullish now, these weekly charts are showing bullish, bullish, bullish. We have to see how price acts around here, and it can turn bearish. We have to be aware of that. We have to be aware of the environment we're in, and that it can change very quickly. And if we get any sort of signal on a weekly chart that's showing that this this right here, this buying demand at this area is failing, then we have to be aware of that. But this weekly chart is telling me the weeks to come will be bullish. They will continue to be bullish for a few weeks, okay? And we know where those failure points are, right? We know where those failure points are. You start closing weekly back below this breakout area, right? You have a wick that comes in here, bounces. You gap down and you flush down. You come up in your same area, find resistance, and then that same area, you've got buying pressure on institutional volume. So if for any reason we're back down in this area and we are not seeing a bounce, that's bad news. That's how we know it's failing. That's how we know we could be going bearish again, right? That's how we know it's failing. Okay. XLF financials, we talked about this being a big area. It was a big area. You don't have the same money flowing into financials. Look at the volume. So you do have volume coming in. Yeah, on the sell side, you have volume coming in at the bottom, but we don't really have. You can see we have about half the volume on this up move. So the XLF is not leading. Volume-wise, it's not leading. Percent-wise, it is leading, up 5.36%. So what does that tell us? Short-term bullish. Long-term, maybe not so much. It's difficult to tell at the moment, but nevertheless, we have the same pattern here of selling pressure that gets bought up into a huge weekly breakup candle. And so it's the same deal. You have this area on the down move that's supported, resistance, 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 broken. If we are getting back below this area, closing daily, especially closing weekly, that's telling us something different is going on. And this is likely going to want to come test this area up here, right? You have a lot of price action in this area. It's obviously very important to the market. That's where we first stopped, then saw resistance up here. And so it's likely going to come test somewhere in this area. Okay. And then tech was severely lagging on Thursday. And so this is kind of our weak link at the moment. We know that this is a bit different. It's big picture bullish. I shouldn't say bullish, more bullish. It's been held up. It's been propped up. People have been buying tech on this drop. Maybe part of the reason is because tech could actually see an increase in sales during this time period when people are at home. Tech is not really laying off a lot of people in this period. So maybe that's part of the reason. But nevertheless, it's lagging the market short term, which is a sign of weakness in tech. So personally, I don't really think you want to be, I wouldn't be playing as much tech on the long side. It's not that it was a bad close, right? It was fine, but it just doesn't look as strong, right, as small caps and as the transports. That's where you have that high volume money flow coming in, and they're really leading the markets. If we are to see more upside, I think that's where you want to be putting your money to work. Be a little skeptical here in the tech sector. It just doesn't look as strong short term. And so if we are going to continue a short term rally, I think that you want your money in better places. Okay. Let's see, am I missing anything? I don't think I am, but let's just go back one more time, and I want to pull up a cleaner chart. Right, so these are just major daily levels, daily pivots. And again, we have the same area that I talked about here where this gap is 61.8% just above. So for me, with the weekly trend line being brought back, and that's also in convergence with this area that we've broken out of, if the market's to pull back, I'm expecting strong buying, very strong buying. And so my ideal scenario here, what I think would be best for the market, would be a pop-up early next week into this zone, and then I think get short and look for this to pull back either to this zone here, the 38.2, this breakout zone, or make a low down here. Now, I don't think this would be quite as bullish. I think it would be more constructive if we pulled back here. The most constructive bullish, like I said, the most bullish scenario would be no gap, and you just keep sitting sideways here. What would that tell me? That would tell me the market wants to push through this really tough area and actually get up here, all the way up into the 300s, 310, 315, call it. And what would that mean? Well, since we have this area of demand down here, and that 313 area is actually an area of weekly supply. So we have down move. This is where sellers accumulated short positions, right here on this week. You always want to keep in mind in a market, where are people positioned? Where are people short? Where are people long? How will that affect price movement? So this is really your area where you have the most people that got short. So that's where you're going to have shorts step in again. And so somewhere in this area is likely where I think we will see more of a top. If we come in quick into this zone, I think it's short, but I don't think it's going to last long. I think that's going to be short-lived. When you look at the other indexes, the leading indices, and how bullish they are and how much room they have up to those trend lines, I think you're sadly mistaken if you think that we're just going to fall out of bed. You are not reading the chart. You are just blinded by the news. You're blinded by the media. And you're really, really foolish if you think that this is just going to fall out of bed, because that's not going to happen. That's just not what price is telling us. You have to look at how the market responds to the news, not just, oh, bad news, market's going down. That's not what we're looking at. So again, what I really think is going to happen here is, however the short-term moves play out, we'll see. But long-term, I think we get more of a solid selling attempt up in this supply zone, right? That would only make sense. This is where the most shorts have accumulated positions. This is where shorts are going to come back. This is where people thought it was a good price to sell and get out, so it's going to be a good price to sell and get out again. And then maybe you pull all the way back down to this area of demand, and we'll see from there, right? We don't have all the candles in between, so we don't know exactly what price is going to look like. But long story short, market's bullish, treat it bullish. There can be short moves in both directions, but you have a very clear buying area here, very clear selling area here. I would not be quick to get short on this market, okay? Hope this helped you guys. Please like, subscribe, and hopefully you'll share with everyone that you know if you thought that it was helpful. And we'll see you next week, and we'll see how this played out, and we'll go from there, okay? Have a good one, guys. See ya.